Welcome back to Golden Roll Radio, where we're going to talk about gold first today. And gold is trading in between the 1260 range and the 1300 number. We did push slightly above 1300, but right now we're trading at about 1275.
You know, we were talking in a staff meeting yesterday, and I put Miles on the spot asking him for his technical support, and he really felt like it had moved from about 1263 to about 1270, and that's exactly where we bounced this morning, by the way. More technically, Robert, I'd say resistance probably 1295 still, and that would enable us to break above the 1300. What do you think, Miles?
Yeah, double taps on that low end support level between 1263, 1270. We haven't had much of a push up. So I'm still short term thinking even to down in gold. We have to see 1310 or above to call the next up movement.
I agree. Markets are appearing to be slow, even in our listeners and in our clients. They seem to say, well, you know, gold's not really doing anything. And they forget gold's still up over 11% on the year and up over 22% over the last 2 years. And it's hard to find anything that compares to that. So, yeah, it seems as if gold hasn't done a whole lot, but give credit where credit is due. And some of this downturn, quite frankly, is due to the dollar, isn't it, Robert?
That's right, Tori. Yes, the dollar has a new closing high from Tuesday's close, and that's going all the way back to the end of July.
Yeah, the dollar is up 3% from its low, like you said, and correspondingly, gold's down 3% from its previous cycle high here. So that is a good indication of that inverse relationship we often see between gold and the U.S. dollar. Not always.
Right, and we did talk about that a couple weeks ago when we were mentioning Spain and Catalonia and Europe, and the euro turning down should push the dollar up.
Right.
Gold having such a strong move up this year was obviously due a corrective phase back down. So this is just the seesaw of how markets operate outside of maybe the Dow Jones Industrial Average. There's no such thing as a market that only goes one direction.
I think we'd be remiss to not mention also copper has surged to a new 3.5-year high and seems to be kind of catching the wind in the sails on the reflation trade.
I think that is key. And our numismatist, our in-house numismatist, checks copper every day. He follows it as closely as he does silver and gold and the premium markets. And so I know, even though he's not here today, he's out there cheering on copper because that is a good indication. And, you know, the ratios come down from 76 down to 75 in gold to silver. Silver to me, too, is also an inflationary indication. And with all the talk coming out of the central banks regarding the concern of a lack of inflation, it's just not strong enough for them. We're going to continue to see inflationary pressures built into the market. And Robert, I think it's a great point. Keep eye on copper, keep eye on oil. It's not just the precious metals commodities.
Well, speaking of inflation, I think the market is on hold waiting to hear who the next Fed chairman will be. You know, the vote today came out in the news that hands went up for John Taylor. I have a hard time believing that John Taylor is going to come in, but maybe he will. The reason I have a hard time with it is because Trump seems to not like to be rule bound. He seems that he wants to break into a fresh new world of, you know, whatever he says goes. And for Taylor to have the Taylor rule dictating how they're going to target interest rates, I don't see him wanting to be bound by that rule. Would you guys agree?
Yeah, I think that's an interesting point. There's something political going on here as well. It wouldn't surprise me if it doesn't end up being Yellen. You know, her name's not, she hadn't resigned.
Sure.
And he may be just getting a whole lot of backroom dealing going on with Yellen in order to keep her in that place. And maybe Taylor ends up being a regional governor or something, a Fed governor. I don't know. You know, what do you think, Miles?
Well, and maybe I've become the negative Nancy to the point where I'm so disenchanted with the Fed, I cannot imagine a world where we bring a hawkish Federal Reserve leader in.
I just
don't believe it.
Yeah.
So I know they mentioned the idea of having a co-Fed chair. I heard that this week, which I find hilarious. Not ever heard of a country that has a co-leader. I don't think it works that way, because ultimately you have to have somebody that says, regardless of the opinion, I get to make this decision. So I don't think that exists. I think there's a lot of pandering to the populace right now and pandering to Congress and to the Senate. I think the hand raise thing is hilarious, and I don't think something like that holds any weight whatsoever.
Yeah, I don't think it's not intended to be an official vote. I think he's seeking opinion, and And quite honestly, if Taylor does get in, would that be negative for gold? Yes. If he follows suit, but we're all used to campaign promises not playing out. If a hawkish Fed chair gets in, that can be negative for gold because that can be very strong dollar. That doesn't mean from a macro cycle standpoint. It just means the reaction to gold to a Taylor selection would most likely be a decline. So we'll keep our eyes on it.
Though? I was going to argue that point. I think short term, it would. Mm-hmm. I think the dollar would rally just because of the expectation of what he's going to do with raising interest rates, protecting the power of the dollar. However, if he raises interest rates, the debt becomes unsustainable, right?
Correct.
And the economy slows down. And if the debt becomes unsustainable, how do we pay for the debt? And so you're almost going to be creating a bigger problem by raising interest rates. And I think that's where gold would actually then benefit from somebody coming in like that and causing a problem in the economy. Because I think that would cause our next financial crisis.
Well, we can't pay for the debt now while it is quote unquote sustainable. So I think Robert has a good point there. We mentioned this last week, but look what happened to the precious metals and all the commodities markets back in 08-09, right? You have your sell-off on the paper side of things that coincides with the sell-off on the equities. Then you have the panic in the streets looking for anything that you can grasp onto that's going to preserve buying power. We didn't have Bitcoin back then. We do now, and I think some of that money will go that direction. But we also have the precious metals and the commodities and railroad companies and tangible assets and real estate and all sorts of things that people are going to dig their claws into when they realize their paper assets don't hold any water anymore. So I absolutely agree that in the short run, a hawkish, interest rate rising, deflationary, not even deflationary, but less inflationary candidate stepping in will be incredibly negative for the equities, which have been exclusively propped up by the money coming in from the Fed. But in the long run, I think this ends up looking exceptionally bullish for all physical commodities, from Dr. Copper himself all the way down to things like platinum, palladium, rhodium, gold, and all the others.
You guys make great points. I mean, the debt obligations, going back to your point, Miles, it's about the debt, right? Which means it's about the spending. And the Treasury Department, the executive administrations have been at odds with the central bank for years. And really, it's been the central bank saying, look, we're not the problem. The problem is government spending. You have to rein in and have a legitimate, responsible budget. And until you do that, we're going to continue to operate in crisis mode. And I think that's what you're seeing. So that's why I say yes. In the microcycle, small result, a Taylor appointment drives gold down. In the macro cycle, it doesn't matter. When you have debt that's 1,000 times, 1,000%, of GDP between household debt, corporate debt, private debt, Medicare, Medicaid, Social Security, all of those things, pensions, which we're seeing defaults in now, all of those things are 1,000% GDP, insurmountable, and yet they spend as if it doesn't exist. So you're right, the Fed chair can only do so much, and ultimately in the long run, I'm not talking down about gold. It is a primary fundamental that you guys are bringing up as to why you actually need to diversify into gold.
One last note is that the MACD on the S&P 500 index has now turned negative for the first time since August. And so that may be showing that the equities market is reacting to that hawkish news.
Well, and it was even in the Wall Street. I mean, there's a great concern with the downturn in volume. Equities are setting new highs on increasingly lower volume, record low volume. So that also is a precursor to a market turnover. I know we've been calling for it, but I appreciate you bringing that up.
Yeah, and breadth yesterday's action, Tuesday's action was abysmal.
Well, and you're going to see, though, Abe has a landslide victory, which means Bank of Japan is going to continue with their bond buying. They're going to continue buying ETFs in the U.S. market and otherwise. So just when we think it should turn down, you may see a further rally as a result of his win and record stocks, certainly, in Japan. So we'll get off that, back onto the metals. Anything to talk about briefly on silver before we go?
I think silver's going to keep hugging that trend line we've been talking about for weeks, so I don't think there's a lot of new news there. Everything's waiting for gold to make another decision, except for palladium, which of course keeps putting in new highs.
And rhodium.
Please be patient. Watch that silver. Watch the platinum. We are on the right side of the fence here if you're holding those white metals. And in terms of the gold, we do have a specific recommendation this week.
We do, which is something we've never offered before. So what we're talking about are MS60, Mint State 60 grade, about 100-year-old English sovereigns. They are made on 5 different continents. They are probably the most collected coin on the face of the planet, most recognizable 100 years ago. These are uncirculated mint state coins, and we're offering them at a price that is essentially about equivalent to what you would buy a bullion quarter-ounce gold eagle.
The one thing we try to do every week, as you guys know, is find opportunity within the precious metals market.
And value.
And we've been talking about the importance of adding platinum to your position. We've been talking about the relative price ratio between gold and silver and between platinum and palladium. Well, there's something else a lot of our clients have taken advantage of, and that's even the relative value within different types of the same metal. Silver bars versus silver coins.
Versus junk bags.
Rare coins versus bullion. And to be able to step into a market right now, into a rare coin that at least in the last 12 years I've worked here has shown 40 and 50% premiums over and above their bullion counterparts. To step into a coin right now that is equivalent to bullion pricing or within a few percent of bullion pricing, the opportunity is unarguable.
Absolute no-brainer. We've seen the bids higher than this current ask price. So
we have a long list of reasons why this product makes sense. So call us for more information.
Yeah, Robert, you're exactly right. Diversification is king within any type of portfolio.
King George V?
In this case, King George V, because that's who's on the coins. Thank you. And as always, we encourage you to not just buy gold, but take an active, focused, strategic approach to how you build any metals portfolio. So as usual, this is Miles again signing off with Robert and Tori for Golden Rule Radio. We thank you guys for stopping by.
Call us at 1-800-525-9556.
Follow us on Twitter too at ICA Gold, and subscribe to this podcast by clicking the subscribe button below. But again, call us. We'd love the chance to speak with you most. So have a great week.